Welcome to the Deep Dive. Today we're really digging into the Q3 2025 earnings call from B2Gold, that's BPG, happened midday November 6th.
Yep. And our goal here is pretty straightforward. Cut through the noise, we're pulling out the key financials, the operational stuff you need to know, and crucially, that forward guidance. Basically, everything experienced investors are looking for.
And it was quite a call, wasn't it? There was this real tension right from the start. The market reaction during the call was, well, pretty negative.
It really was. You had this fundamental disconnect. Management's talking up solid operations at their main mines, hitting targets.
Right.
But the stock, it just dropped, fell about 5% during the call. That tells you the market was laser focused on something else.
Yeah. Worries about the growth pipeline, it seems. Execution risk.
Exactly. So you had this underlying strength, but the headlines, especially around the new Goose project, just spooked investors. Volatility creates opportunity, maybe, but it was messy.
Okay, let's break down those headline numbers first, the ones that caused all the confusion. Bottom line, adjusted EPS was civil 14 cents.
Mm-hmm.
That actually beat the street. Consensus was Gerald 13 cents. So on paper, that looks good.
It should have been good news, but nope. The top line, the revenue, that's what grabbed everyone's attention. $782.9 million.
Which sounds huge. I mean, 74.7% growth year over year.
Massive growth, yeah. But the expectation was way higher. The street was looking for something between like $861 million and $907 million, so a big miss.
Okay. And that miss, despite the EPS beat, just signaled problems.
Precisely. It suggested maybe things aren't ramping up as smoothly as hoped, especially with the new assets, wiped out any confidence from the EPS beat.
Gotcha. So what were the core operational numbers driving things?
Right.
Production.
Overall gold production was 254,369 ounces. Now, that includes some pre-commercial ounces from Goose, the new mine.
Okay.
And they got a huge lift from the gold price. Realized price was strong, about $3,133 an ounce this quarter. Big help.
Definitely cushions things. And costs.
Yeah.
AISC.
All-in sustaining costs, yeah. Came in at $1,479 per ounce for the group. Pretty much in line.
All right. So that high realized price definitely helped paper over some cracks.
Yeah.
But let's get into the operational headache, the thing the market clearly seized on, Goose.
Right. The Goose mine up in Nunavut. It's their big growth project, the future, really. And they did hit a major milestone. Commercial production started October 2nd, 2025, on schedule.
Okay, so the build was fine. The problem started after, during ramp-up.
Exactly. Post-completion snags. Management highlighted two main issues holding back throughput in Q3. First, a crushing capacity shortfall. Basically, couldn't process ore fast enough initially. Second, a temporary delay getting to the higher grade stuff underground at the Antelope deposit. Some slower than expected equipment parts delivery, issues getting specialized operators up there quickly, just ramp up friction.
And that friction led directly to the guidance cut, which hurt the stock.
That was the killer blow for sentiment. Yeah. They had to slash the 2025 production guidance for Goose. Dropped it down to a range of 50,000 to 80,000 ounces.
Ouch. So the fix for the crushing bottleneck, what are they doing now?
Well, short term, they've brought in supplemental mobile crushing capacity just to get more ore through the system now.
Okay, a temporary patch.
Right. Longer term, they're engineering permanent fixes, looking at the primary crusher design, the secondary grinding circuits, adding surge capacity. They expect a final plan by December 25, and they'll implement those changes during 2026.
Okay, but management's still sticking to the big long-term picture for Goose, right? Something like 300,000 ounces a year for the first 6 years.
Yeah.
Including 250K in 2026.
They are absolutely adamant about it.
Is that credible, though? After this kind of revision, investors must be thinking, okay, is this just talk?
That's the million-dollar question, isn't it? Management insists these are just commissioning hiccups, throughput constraints, basically, factory floor problems, not resource problems.
So the gold's there, they just need to tune the machine.
That's the message. They're saying the ore grade is solid, the resource is fine, they just need to fix these bottlenecks. And they backed it up by specifically reiterating that strong 2026 forecast of 250,000 ounces. Time will tell, but that's their stance.
Okay. It sounds like the older mines, Fekola, Masbate, Otjikoto, really saved the day this quarter.
Oh, absolutely. They were the workhorses. Stellar performance across the board from those three. Beat expectations on production, came in with lower cash operating costs than expected. Fekola's underground, in particular, is ramping up ahead of schedule, which helped offset some of the Goose pain.
Good news there. And they also made a positive move at Otjikoto in Namibia. greenlit something new.
They did approve development for the Antelope underground deposit. And importantly, they've already tweaked the plan, cut the initial capex needed from $129 million down to about $105 million.
Yeah, nice optimization.
Yeah, leveraging existing infrastructure. It pushes Otjikoto's mine life out well into the 2030s. Good long-term planning.
Okay. And shifting gears slightly, what about that big catalyst in Mali, the Fekola Regional permit? Still waiting.
Still waiting, but management sounded extremely confident. The word they used was imminently, expecting it by year-end 2025.
Imminently, as analyst speaks for soon, right? But are they backing that up?
Seems like it. They mentioned they're so confident they're already doing pre-stripping work and getting equipment ready before the permit is officially in hand.
Wow, okay. That suggests they really believe it's coming very soon, ready to hit the ground running in early 2026.
That seems to be the plan.
All right, let's quickly touch on the financials. Balance sheet still looking okay despite all the spending on Goose.
Yeah, pretty solid. They ended the quarter with $367 million in cash and equivalents. They did draw down $200 million on their revolving credit facility, the RCF, in Q3.
Why the draw?
Mostly managing working capital, tied to some prepaid gold stuff. Timing, basically.
But with gold prices so high, they can pay that back quickly.
Looks like it. Already repaid $50 million in October, just after quarter end, and management said they expect to repay a substantial part or all of the rest by the end of this year.
Okay, that's a strong signal about cash flow generation.
Definitely. And on the shareholder return front.
Kept the dividend steady. Yeah. $0 or 2 cents per share for Q4. And they're still using their buyback program, the NCIB. Bought back about $10 million worth of shares in Q3.
So returning capital while still investing heavily in growth shows confidence.
Now, that small capex bump for Goose in Q4, Can you clarify that? It wasn't really new spending, was it?
Good point. Yeah, the Q4 capital budget for Goose went up by $15 million from 45 Ms to 60 M-pounds. But it's important to understand why. It wasn't construction overruns or anything like that.
Okay.
It was basically an accounting change. They capitalized some site general and commissioning costs that were originally planned to be expensed as operating costs. So it's more of a recategorization than an actual increase in the total cash going out the door for the project itself.
Got it. Technical shift, not a budget blowout.
Mm-hmm.
Okay. We can't ignore the geopolitical side, especially with Mali. How did management handle questions about the situation there?
Yeah, the CEO addressed it directly, talked about recent media reports, suggestions of instability around Bamako, potential terrorist takeovers.
Scary headlines.
Very. He called those reports erroneous and a great exaggeration. Emphasized that the Fekola mine is 500 kilometers away from the capital.
Which is a fair distance, but you know how markets react to political risk headlines? Did they seem defensive?
They addressed it proactively. Stressed that mining operations haven't been impacted, no missed production due to turmoil, no fuel shortages affecting them. They expressed confidence in the Malian government support and ongoing help from international partners, including the U.S.
So the message was risk acknowledged, but currently managed and not affecting the mine.
That was the clear takeaway. Business as usual at Fekola, despite the noise.
Okay. Stepping back from BTG specifically for a second, the whole gold mining sector is actually doing really well right now, isn't it? Despite BTG's own stock wobbles?
Oh, absolutely. The macro backdrop is fantastic for these guys. High gold prices are a huge tailwind. You look at the main gold miner ETF, GDX, it's been very strong, up something like 46.6% over the last 3 months alone.
Wow. So BTG has that strong sector wind at its back, even if its own ship hit some choppy water this quarter.
Exactly. That high realized price gives them a lot of breathing room financially.
So looking forward, if you're an investor waiting for BTG's sentiment to turn around, what are the key things to watch? The near-term catalysts?
I'd say there are 3 main ones going into 2026. First, obviously, Goose. Need to see those optimization results probably late this year or early next. Proof that the fixes are working and they're on track for that higher throughput.
Okay. Goose execution is number 1.
Number 2, that Fekola Regional permit in Mali. If management's right and it lands imminently, that unlocks near-term growth starting early 2026. Huge deal.
Right, the imminent permit. And third,
just continued progress on developing the Antelope underground at Otjikoto. It's less immediate impact, but reinforces that long-term production profile and stability.
Okay. Goose fix, Fekola permit, Antelope progress. Got it. Now let's pivot to our favorite segment. This is not financial advice. We're just brainstorming here, looking at potential ideas based only on the analysis we've discussed. Purely hypothetical.
Absolutely. Standard disclaimer applies. But this kind of situation, where the market punishes a stock heavily for short-term issues despite underlying strengths and catalysts, well, it can create interesting potential setups.
A divergence between sentiment and maybe fundamentals.
Exactly. So what's the outrageous but plausible trade idea this time?
Lay it on us.
Okay, how about a paired trade? Go long BTG, B2Gold, and simultaneously short one of the big diversified gold majors. Pick one that maybe lacks BTG's very specific near-term potential catalysts.
Interesting. A relative value play. Hedge out the general gold price move.
Precisely. You neutralize some of the sector risk, the risk of gold prices suddenly falling off a cliff. You're making a bet specifically on BTG's internal story relative to a peer.
So the rationale is that BTG is currently beaten down because of the Q3 miss and the Goose uncertainty.
Right. Market's pricing in that execution risk heavily.
But it's got these two potentially huge near-term binary events. The Fekola permit, which sounds like it could drop any day, and the Goose optimization results early next year.
Exactly. Management sounds very confident on both. If either one of those hits positively, especially the permit, you could see a very rapid re-rating of BTG stock compared to its peers. The growth discount or execution risk discount could vanish quickly.
So you're capturing that potential snapback, that closing of the valuation gap, while being less exposed if the whole gold sector decides to take a breather.
That's the idea. It's a trade on execution and catalyst timing, capitalizing on the current negative sentiment. Plausible, but definitely hinges on those specific events happening soon.
A compelling structure definitely plays on that disconnect we talked about at the start. Short-term pain versus potential near-term gain.
It all comes down to, do the Goose fixes deliver, and does Molly issue that permit before everyone breaks for the holidays?
Right. So to wrap up our deep dive today, B2Gold, operationally strong at the core mines, maintained the long-term vision. But the market clearly zeroed in on that Q3 revenue miss and, more importantly, the lowered 2025 guidance for Goose, driven by those ramp-up issues.
Yep. And looking ahead, it's all about execution now. Can they fix the throughput issues at Goose? And will that Fekola Regional permit land as expected? Those two things are really going to steer the ship for BTG heading into 2026.
And remember, everyone, what we've discussed here is just for informational purposes, exploring the data from the call. It is absolutely not financial advice. We always encourage you to do your own research. Thanks for joining us on the Deep Dive.